Welcome to the Crypto CLT or YouTube channel. In today's video we explain you what a Bitcoin ETF is. A Bitcoin Exchange Traded Fund, ETF, is a financial product designed to provide investors with a convenient and regulated way to gain exposure to the price movements of Bitcoin. The world's most well-known cryptocurrency, ETFs, in general, are investment funds that are traded on stock exchanges, much like individual stocks. A Bitcoin ETF, specifically, is structured to track the price of Bitcoin and enable investors to buy and sell shares of the ETF on traditional stock exchanges. Here's a more detailed explanation of what a Bitcoin ETF entails. 1. Structure. A Bitcoin ETF is established and managed by a financial institution or asset management company. These entities purchase and hold a reserve of actual Bitcoin, typically stored in secure custodial services. 2. Share creation and redemption. The ETF issues shares to the public, which can be bought and sold on stock exchanges. These shares represent a fraction of the total Bitcoin holdings held by the ETF. Market participants, known as authorized participants, can create or redeem shares of the ETF. When they create shares, they deposit an equivalent amount of Bitcoin with the ETF, and when they redeem shares, they receive Bitcoin in exchange. 3. Price tracking. The value of each share of the Bitcoin ETF closely tracks the price of Bitcoin itself. This is achieved through a combination of the ETF's holdings of Bitcoin and the mechanism for creating and redeeming shares. 4. Accessibility. Bitcoin ETFs make it easier for investors to gain exposure to Bitcoin without having to directly purchase and store the cryptocurrency. Traditional brokerage accounts can be used to buy and sell shares of the ETF, simplifying the investment process. 5. Regulatory oversight. Bitcoin ETFs are subject to regulatory oversight, which provides investors with a sense of security and transparency. They must comply with the regulations of the jurisdiction in which they are offered. 6. Liquidity and trading. Bitcoin ETFs are traded on stock exchanges during regular trading hours, making them more accessible and liquid compared to directly trading Bitcoin on cryptocurrency exchanges that operate 24/7. 7. Taxation. The tax treatment of gains or losses from Bitcoin ETF investments may vary depending on the tax laws in the investor's jurisdiction. It's essential to understand the tax implications before investing. 8. Risk factors. Despite their convenience, Bitcoin ETFs are not without risks. The price of Bitcoin can be highly volatile, and this volatility can impact the value of the ETF shares. Additionally, like any financial product, there are management fees associated with ETFs, which can affect overall returns. Advantages of Bitcoin ETFs. Accessibility. They offer an easy way for traditional investors to gain exposure to Bitcoin without dealing with the complexities of cryptocurrency wallets and exchanges. Regulatory oversight. Bitcoin ETFs are subject to regulatory scrutiny, which can help protect investors from fraud and malfeasance. Liquidity. ETFs can be bought and sold on stock exchanges, providing liquidity and flexibility to investors. Tax efficiency. Depending on your jurisdiction, investing in Bitcoin through an ETF may have tax advantages compared to directly owning and trading Bitcoin. Challenges and considerations. Volatility. Bitcoin is known for its price volatility, and this can impact the value of the ETF shares. Management fees. ETFs typically charge management fees, which can reduce overall returns. Tax implications. Tax treatment may vary depending on your location, so it's crucial to understand how gains and losses will be taxed. Counterparty risk. Investors rely on the ETF issuer to hold and manage the underlying Bitcoin securely. If the issuer faces financial or security issues, it could impact the ETF. In conclusion, a Bitcoin ETF is a financial instrument that bridges the traditional financial world with the cryptocurrency market, offering investors a regulated and convenient way to invest in Bitcoin. It provides exposure to Bitcoin's price movements without the need for technical expertise in cryptocurrency management. However, like any investment, it comes with its own set of risks and considerations that investors should carefully evaluate before participating in the market. If you like my videos, please like and subscribe to the channel.